Hey everyone, thank you so much for joining Archangel Alts as we continue our lesson plans. So, as a recap, we have gone over our charts. So we learned the timeline, the value, candles, time frame, and then we did a general overview of our different indicators, what they are, why we use them, which ones we're using, and kind of sort of what they look like together. Then we did each one individually, where we did a video on the volume. We've done a video on MACD, moving average convergence divergence. We've done our Bollinger Bands, and we've done Stocker SI, the Stochastics Relative Strength Index. And now this is the final separate intro video for each individual indicator, the VWAP, the probably most underused, underrated, most unaware of type indicator there would be. Look how just incredibly simple this thing is, and yet the wealth of information that it is giving you is super fantastic. So VWAP stands for volume weighted average price. Volume weighted average price. Now, before I show you what it means by that, let me show you something along the lines of let's just say the MA and volume. Is that going to help as much? Yes, that's about as close as I can get to that. So, as we've gone over with volume, you can see that our little cityscape down here is made up of just the amount that is being purchased, how much, when, and whether that comes out to being people that are selling something off. We see how much is being sold, or whether somebody is buying in, whether it's measuring the sheer volume of buy-ins. Now, this goes back and forth regardless. People are buying in and selling off, throughout the entire process. But we end up with what the end results were of each of the candles period of time, and it changes with that. So this is the volume. Now, if you were looking at average price, well, if these are all moving averages and they're averaged out over different long periods of time, days, weeks, in fact, if you're doing this, then you're really covering months, even though it goes back a certain period of time. We're averaging it all out through, 2 hours at a time. That stretches out a long period. If each of these is a day, then it's based on a very long period of time. So, we have our volume down here, and if we were looking at moving averages, we can see, measuring what has happened over time, there comes certain overlaps that give us an indication of what the averages are doing over time. That moving average. So, let's just say that, 2 weeks ago, at 3:01 and 4:38, or something along these lines, that you take the average of those two, and it came to, let's say, 375 or something along those lines. So then, that would be the plot of one of these, and then here's the plot of another one. So this is, a form of looking at the averaging of the price over time. Okay, this is an exponential version of that same thing. You can see it comes out to slightly different figures, and they're useful for different periods of time, different bullishness or bearishness of the market, et cetera, et cetera, et cetera. But that's kind of what it looks like in having the information about the volume and averaging price. And you kind of get used to knowing what the real information is that you're seeing when you're using it in context, especially when you get familiar with a certain coin. You get kind of the feeling for these things. Now, I've already made it clear, my preference is using the Bollinger Bands and the Stocker SI and the MACD and the VWAP. I like having this combination of things, which, different people will use different things. A lot of times it'll be something along the lines of this. And other times it'll be something along the lines of this. Usually not that at all. So that was an example that I was giving you of seeing the volume and representation of the average price. But this is volume weighted average price, meaning that it is calculating from second to second and then, visualizing over whatever time period you're looking at what the combination of the volume and the average price is doing in comparison to the actual value that is running over here at that time. So now I'm going to go to something more frenzied and busy if I can find it. There's only one choice I can think of because the market is slow. We've actually gone down $10 million in the 24-hour volume measured in Tether for the Bitcoin. But if there's anything that has a chance of putting some trade through to where you can actually see the candles move over time, is going to be Bitcoin. And if that is totally not the case, then that's just really weird. Let's look at what the highest hitter right now is. Things really have slowed down quite a bit. As everybody, I think, was getting used to that fun action going on. But yes, things are slowing down again, and we need to see whether they can get stirred up again. So let's be part of the crypto revolution. All right, so we've got some trades going through every couple of seconds. It's not the really insane version of things, but we're looking at our current candle right here, and our VWAP is drawing a line through the volume weighted average price. Okay, now you can see that it is not too terribly far away from what the value is doing over here. It's not like, yellow is down here and the candles are way up here, or, the yellow is up here but the candles are way down here. You can see it's somewhere in the neighborhood of what's averaging, okay? And it remains pretty consistent with that. And technically, if you deal with statistical probability, the further out you go, the more information it's averaging together. So they should come closer and closer to where if you were to analyze the volume and the price together and get some kind of plot that you could draw exactly where that comes to, that they would be like almost dead on. You'd come to a certain point where they should be just exact to one another. But what's going on here is that let's say we're right here, okay? And we're down here. Well, my confidence level in being able to do a position that is going to clear to profit, for me, goes up exponentially. It goes up a lot. The further away beneath this VWAP line. And that does take into consideration if I see this. I mean, gosh, in this market and in cryptocurrency in general, unless there's a year where it's just basically going up at a slant the entire year, which would be beautiful. That's not going to happen anytime soon, as far as I know. I'd love to see that change. That's anything extremely optimistic. I am the first one in line to say I would love to be wrong about anything that I think is going to take some time. But if I see a downward slope, then even if I'm optimistic here, my best guess for optimism is that they're going to come together. That's what eventually makes sense between overbuying and overselling. People getting overly enthusiastic and continuing to buy, and then getting nervous that they're going too far and that's bound to stop at some point. And then the selling activity starts to take hold, and you have an increasing velocity of sell-offs, and then that slows down, and then you have an increasing velocity of buy-ins. All of that averaging that takes place when there's too many people buying and it's starting to slow down, that usually happens when it has surpassed the volume, meaning that there is a certain amount of volume that is being bought and sold, and that averages to something. And when you get too far beyond what has been likely to happen previous to right this second, you have exceeded that. It shows overbought literally as it's happening, because you're weighing the average, this longer term, kind of like your moving averages. These guys down here, your moving average convergence, divergence, your moving average, and your exponential moving average. You have your same type of idea, but it's also taking into account the current volume. So if that moving average is far exceeding the volume that is averaged in with that moving average, then you can assume that at some point it's going to do just the opposite. You don't want to make this your buy-in point. Something else, some other combination might have you look at this and say, like you might think, this went up this much. This is going to go up from here. I think it's going to keep going. if you have the VWAP, it would astound me if it was wrong about this kind of information. The more drastic it gets, if you don't see that volume coming up with this, according to the VWAP, if you don't see that they're both averaging in the same direction, eventually that overbought is kicking in. It is going to come crashing back down. The sell-off is about to happen. Now, you might also be worried about, oh my gosh, it's going to go down forever. Maybe I should just sell off. It's never recovering. Depending on what it is that's going on at the time. Once again, if I don't see this continuing to have this downslope, then my confidence is going to increase that eventually it's going to start meeting that same place. Now, it's, as you can also probably tell, it's not this massively, here's the hidden gem indicator that's going to tell me for sure that when I get this far that I've got a profit. This can come down if that's what's happening. This will level off if that's what's happening. But see, as level as it is here, it's barely under, barely over. It's steadying out. It's coming closer and closer to a resolution, at which point eventually, if it keeps doing that, there will be a breakout. So your volume-weighted average price is just this really nifty thing that gives you an instantly recognizable visualization of when the bids have gone too far in either direction. It's letting you know that this is what the final calculation of the current value of the coin is as it relates to how much buying and selling is going on. So, and keep in mind that this line represents whether it's a buy-in or a sellout. Whether it's mostly volume driven by buys or sells. If the value is going down, and there's a lot of that volume is going to stay in a certain place. And you got to think that the more that it sells off, the more it eventually reaches a point where people think, wow, enough is enough. This is so cheap, I got to buy in. So, it works just beautifully. It's so simple, but the power of that information, especially once you get an instinct for this stuff, like I've mentioned in our subscribers section, I'm going to be doing some rapid fire sessions, which, I have to step out of my comfort zone and trust something that is kind of proven time and time again with our instinct, with my instinct, as opposed to, being fully confident because I know that I'm reading all my stuff right. And have the instinct for something. With the rapid fire, I'm kind of turning my analytical brain off and just going with what I, yes, it is still an understanding thing, but it's kind of more of a subconscious thing, like driving a car. I'm not questioning my reasoning behind things as much, and we do very fast rapid fire separate to our live day trading for our subscribers. And as I test that more and more with them, we'll be able to see that I tend to lean towards the cautious side using the VWAP and just call positions. And if they don't trigger, nothing ventured, nothing gained. If they do trigger, meaning that, like let's say I called right here, well, then it would trigger. And, it goes up here, then that means that it sold at a profit. If I were calling something right here, it didn't trigger, so nothing ventured, nothing gained. You just, don't hold on to that idea forever. Eventually it might go there and it might be the worst time. Hey, it might even work to your advantage. But yeah, so just using the VWAP, it kind of allows me to not think quite as much and be as analytical over every single move. But the accuracy remains extremely high. And so you can go through a lot of positions in a very, very short time, and it's kind of like a little bit of a Superman secret weapon kind of thing that we just we have tested it so many different times, but I had to be the one to finally decide I'm going to do more of this, because it's just I'm rigged as a too good to be true kind of person. It's like even though we've already tested it with the evidence and the accuracy remains extremely high, nothing should be that easy. So we will be including that kind of stuff. It's live without a net for sure. But, that's just the power of the VWAP as a signal, as an indicator. Yeah, an indicator, I apologize. So, just one last kind of explanation, visualization, work through with this. The line is averaging. It's staying trending along for the most part with what the average price is, but it is factoring in the impact of the amount of purchasing and selling going on, the volume. It's like your market capitalization measured as a line. How much is there and how much activity is going on with it. And that amount gives you the indication of whether you are trending way too high or way too low above the volume and the average price, all measured to each other. So as you have the real price, you're mentally kind of averaging and recapitulating, all these different things. When it gets to a certain point, it's always, whenever there's a turnaround point, it's almost always going to be very accurately when it has gone the furthest distance away from the VWAP. So now I guess the last thing that would be helpful for you to see, because I tend to like to have both of these running, some people are going to be confused by this when they see the VWAP kind of tracking along that middle line, sometimes with the Bollinger. So let me just show you an example of, the middle line is kind of the average that we're expecting the Bollinger to work towards, right? And sometimes they're very close. But what we're not getting from the Bollinger, we're not trying to get an indication of where that exact reversal is from the middle line at all. The middle line is really just tracking our average. That's why it does come close to where the yellow line, our VWAP, would be. But keep in mind, the VWAP, this is the kind of example we're looking for. This has gone well below the VWAP, and then, I'm not measuring exactly what that distance is right now. But let's just say that this was 300 and this was 320 on our fuel examples. That would be, plenty of room to get in and out of position at profit. This is just kind of telling you what the average tends to be. But I will tell you that very often you'll see the middle line of the Bollinger Bands and the VWAP cross over at very critical points. You can see it's almost a perfect balance when all of this comes together there. And so, just honing in on what are these doing compared to the yellow? Well, they're tracking really close. They're just barely underneath it. Now they went over. And so as you get into this range, let's say that, this has gotten away from the yellow. But we have kind of a confirmation of what we might think would be a bounce back over here, because we also can see the Bollinger Bands, and you tend to see a reversal when it has broken the bottom of that Bollinger Band. Very rarely does this continue too far before the Bollinger Band would start opening up and responding to it. So this guy holds really true. The bands work very well. But you can see that, the confirmation for the VWAP, the average volume and price are still hanging around this range, and yet the selling has gone too far. So Bollinger Bands is kind of saying it's going to snap back to this average, and the VWAP is saying, there's way too much volume to support this value, and it's bound to come back up to me. So then it goes beyond that, and sometimes, not always, but usually the idea is when it breaks the top of the Bollinger Band, guess what? It's about to reverse and come back down. So double confirmation sitting right on top of each other. Just remember how you have your color scheme set, and you should be fine. And that, my friend, is our introduction to the wonderful, amazing, masterful VWAP, the volume weighted average price. Thank you so much. Archangel Alts out.